Welcome to Get Rich Education. I'm your host, Keith Weinhold. You can potentially collect your rent income from tenants and then turn around and not pay the mortgage loans on those properties for a few months, pocketing a nice profit. But should you, in the pandemic-induced world of eviction moratoriums and mortgage loan forbearance, there will be winners and losers. I'm helping you sort that out so that you can be one of the winners. That and more today on Get Rich Education. Finally, with Total Control Financial, get checkbook control of your existing 401k and IRA funds to invest in real estate. Yes, you can move your retirement money into your own checking account, but you must avoid the little-known tax that you'll get hammered with in a self-directed IRA. Instead, start your QRP. Learn more and get your free copy of the QRP book by text messaging QRP in all capital letters to 72,000.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Olympia, Greece to Olympia, Washington, and across 188 nations worldwide. I'm Keith Weinhold, this is Get Rich Education, and we are all living in strange times. The squeeze, for some of us, I think is encapsulated in Jerry Constantino of Queens, New York's situation. He is talking with owners of the roughly 500 units that he manages who are worried what's going to happen if the tenant rent checks stop coming in. And as part of his property management duties, Jerry is also talking with the tenants, many of whom he assumes will be delinquent this month because they either lost their jobs or they're just choosing not to pay. Now, Jerry's a hardworking guy, and he knows that the tenant in Unit 31A has not paid his rent yet, and it's a few days past due. But yet Jerry knows that this tenant has not lost their job and ought to be able to pay the rent on time, like he always did before the pandemic. One day, Jerry sees this tenant from Unit 31A in the hallway and says, "Don't mess with me, dude. Where is the rent?" And by the way, Jerry got a little gruff, and his words weren't exactly "don't mess with me," but that's the version that you get here on this unapologetically squeaky clean lyrics show. Besides managing property for others, Jerry is also in discussion with banks himself because he's got his own rental properties and he's trying to figure out how he'll make the mortgage payments during this worsening global health crisis. And a lot of people find themselves in a similar situation to what Jerry is in. Some large property owners have already rolled out payment plans for their tenants and halted evictions because they legally have to, as the coronavirus outbreak roils the economy. Many apartments in the U.S. are essentially these small businesses that tend to have less financial flexibility and will need some help in the coming months. Now, there are some choices for the millions of Americans who have lost their jobs and have no clear prospects for when they'll get them back. Now, three things that are aiding tenants right now, helping them pay the rent, are eviction moratoriums, unemployment benefits, and cash payments like those $1,200 stimulus checks from the federal government that can help many tenants keep a roof over their heads. Nearly half of the nation's 44 million renter households were already pretty stretched financially even before the pandemic appeared. The University of Chicago found that 1/3 of adults can't cover necessities after missing just one single paycheck from their employer. And in fact, 1 in 4 American tenant families pay over half of their income just to make the rent payment. We're basically going to break down Jerry Constantino, the King of Queens situation here, being mindful of something. In general, the average Get Rich Education listener is better off than the average real estate investor for a number of reasons. For starters, one of our core principles here from day one is that we invest predominantly in residential real estate, and that is due to its durable utility. Coronavirus has changed so much in society, but it has not changed the fact that people still need a place to live. In fact, the home has kind of become the center of one's life. It's become more important. You've got to be grateful that we focus on residential because it's recession resilient. Most landlords are still getting 80 to 90% of the rent income, even 100% if you've got a small portfolio. Just think about how many businesses aren't getting 80 or 90% or more of their income now. The restaurants aren't, the bars, the gyms, airlines, cruise ships, hotels, on and on. Are they even getting 30% of the income that they usually get? And although it's the exception, some businesses like large retailers might be getting 105% of their usual income now. We also focus on investor advantage markets here at Get Rich Education with that foundational principle that the market is more important than the property. And so many people get that backwards. We discuss the advantages of being invested in multiple markets so that your tenant income streams are from diverse employers. Anyone that does not adhere to that is in more trouble. And finally, we focus on buying property that cash flows on the day that you buy it, where the monthly rent income exceeds the monthly expenses on your settlement day, on that day that you close, and not maybe it'll cash flow sometime in the future. That's not what we do. And look, in times of crisis, your cash flow is your cushion. And here's what I mean. To keep it simple, if every one of your properties rents for $1,000 and has $800 in monthly expenses, you've got a $200 monthly cash flow on each one. You'd have to lose, just outright lose, and never recover wholly 20% of your income, and then you'd still break even on a monthly basis. This is what I mean, that in crisis time, your cash flow becomes your cushion. If you have a 10% rent loss, your cushion is half-eaten, and your cash flow becomes $100 per door. And as we know, you can't kick out tenants for a while because there is an eviction moratorium. But you can also be granted loan forbearance and not have to pay your mortgage, so you might be able to profit wildly at this time. Each of these two things, an eviction moratorium and mortgage loan forbearance, they are part of the recently passed CARES Act. I've got way more on that later, whether you're in Jerry's situation or you're better off. Let's pull back and look at how unlikely this black swan event, known as the coronavirus pandemic, really is first. Here's some perspective. Last year, the publication called Emerging Trends in Real Estate launched a survey that's just so interesting to look at now that we have the benefit of hindsight. They launched the survey last year called The Importance of Issues for Real Estate in 2020. So they were forecasting the following year. This year, a pandemic was not forecast to be an important issue at all for real estate this year. In fact, the number one survey answer was predicted to be the political landscape. And that could make sense because this is an election year and divisive partisanship sure is not abating. The number two predicted factor was government and budget issues. The issue forecast to be the third most important real estate issue for this year was immigration. Okay, that makes some sense. That was a hot topic for a while, and greater immigration creates more housing demand, sure. Number four was global conflict. All right, that makes some sense. We had growing trade tensions with China and political tensions with Iran and North Korea. The real estate issue predicted last year to be the fifth most important for this year was income inequality. How long do you think it's going to take us here to get to a pandemic or an epidemic? No one foresaw this. Sixth was rising education costs. Yeah, that definitely intersects with housing, as giant student loan debts increasingly prevent people from forming a first-time homebuyer down payment, which keeps them in the renter pool. The seventh most important real estate issue for this year was predicted to be social inequality. Eighth was terrorism. That seems to be going lower on the list as major terrorist acts in America continue to recede into memory gratefully. And number nine, yes, last year, what was predicted in the Emerging Trends in Real Estate survey for this year is epidemics. All those other factors were deemed to be more important, and that's from a pretty respected publication. That source, Emerging Trends in Real Estate, is partly compiled by the Urban Land Institute. Now, there was one Get Rich Education episode where I had a glass half empty kind of segment, maybe 1 year ago, where I was talking about all the things that could go wrong in real estate investing. And I did mention a plague. I used the word plague. And what I was thinking about was, what if an awful bubonic-like plague wiped out, say, 20 million Americans, which would be more than 5% of our population? Well, that sad event would reduce housing demand, of course, if there are substantially fewer live humans. And as sad as COVID-19 is, no one is predicting that it will be fatal to even 0.5% of our population. And I certainly wouldn't have predicted that by this year we'd be practicing things like sheltering at home or social distancing. It all seems like some sort of bad dream. We're talking about, do you get free money should you take mortgage loan forbearance, here on Get Rich Education, episode 290. In fact, if you'd like to read along while you're listening, the entire written transcript for today's episode is in the show notes. You can access those at getricheducation.com/290 and follow along that way if you like. In order for you to understand mortgage loan forbearance, and forbearance means that you can postpone making payments, understand the big picture. I think you can best understand this as part of the 5 links of a chain. Yes, forbearance allows you to break a chain. The 5 links in the chain follow the money. They follow the payments through. A payment goes from employer to renter to property owner to loan servicer to finally the mortgage-backed security investor. Those 5 parties are the 5 links. Now, let's look at what happens here. The first and second chain links involve that payment from the employer, the first link, to the renter, the second link. Economically, how bad is it now? Well, we don't really know yet how high the unemployment rate will get, though we expect it to be substantially higher than that of the Great Recession of 2008 when it was 10%. Chain link 2 to 3 is the renter's payment to the property owner. This is a link that you're clearly quite concerned with. This is your rental income. This is the income that Jerry from Queens is trying to scrape together. We don't yet know what the eventual rent payment default rate will be. Of course, that's going to vary among geography and asset types and other things. But be aware that at this point, about 75% of Americans have lost at least 25% of their income. So about 3/4 of Americans have lost 1/4 or more of their income. As you know, during coronavirus, most areas have an eviction moratorium, meaning that if the tenant can't pay the rent, you can't kick them out for a while. Now, what if you, the income property owner, link 3, don't have enough rent income to pay the mortgage to link 4, which is your bank or your loan servicer? If this is your situation, you want to call the company that you pay the mortgages to. You pay your mortgage to a mortgage servicer. Now, what is a mortgage servicing company anyway? A mortgage servicer, they're the company that handles the day-to-day admin tasks of your loan. They send you your monthly statement, they receive your payment, and they manage your escrow accounts for you. This is different from your mortgage lender. Your lender is the financial institution that gave you the property loan in the first place back on your closing day. So that is the difference between a mortgage lender and the servicer with whom you're dealing with now. Now, a mortgage servicer could either be a bank or a non-bank. A bank mortgage servicer would be names that you've heard of, like Chase or Wells Fargo. A non-bank mortgage servicer, that could be a name like SunTrust Mortgage or AmeriHome, and they're names that you are less likely to have heard of. So to review, money flows from your tenant's employer to your tenant, to you the investor, to the fourth chain link, which is the mortgage servicer. Now, if your mortgage is backed by the government, and those would be Fannie Mae, Freddie Mac, VA, FHA, or USDA loans, and often your loan is government-backed, if you tell your mortgage servicer that you're having financial trouble because of the pandemic, your mortgage servicer has to let you stop paying your mortgage for up to 180 days. That's 6 months. with the possibility of another 6-month extension after that. And you will not have to pay late fees, and there will not be any foreclosure on your property, and there will not be a ding on your credit score either. And it gets even better than that, because at last check, there is not any additional interest beyond your scheduled amounts that are going to accrue on your missed payments while you're in forbearance. Now, you will not magically see a portion of your principal balance disappear, though, and this all pertains, everything I'm talking about here pertains to both primary residences and your rental properties for government-backed loans. Now, if your loan is not government-backed, you might still receive some similar type of relief. Check with your mortgage servicer. This is what is being granted to you during these exceptional times. And the servicer is not going to ask you for a bunch of paperwork, a bunch of documentation to map out your hardship either, but they might ask you some questions over the phone, details about your income, expenses, and some of your other assets like cash in the bank. They're just granting you the forbearance, letting you postpone your mortgage payments. Now, that might sound pretty great, and it is a good start. Look, if you cannot make your payment due to economic hardship, then you should ask for the forbearance. Please do. That's what it's there for. And by the way, don't just stop making payments if you can't make the payments, all right? You can't just do that. You have to specifically ask for the forbearance, but it will be granted. Now, what if you can make your mortgage payments and you call up your loan servicer and ask for a forbearance anyway? Okay, in this case, say that your total monthly rent income is $10K, $10,000, but you only got paid $9K of rent from your tenants this month due to pandemic layoffs, and your total mortgage payments are only $8K. Well, you could make the payment, but yet you don't have to if you go get forbearance. So you could pocket that entire $9,000 worth of rent this month, and you could skip out on paying your mortgages completely, and then you'd have $9,000 of cash flow per month instead of your normal $2,000 of cash flow per month. You probably could get away with that, and this would totally feel like a windfall to you, but that would be dishonest, and it could come with some consequences. I've talked to 2 mortgage lenders this last week to find out what's really going on out there at this time, and I learned about one case where a borrower asked for forbearance, they were granted it, and indeed, like I said, it did not ding the borrower's credit score. However, on their credit report, it marked forbearance on that report. It was like stamped on that report. And you've got to wonder if that's going to impact that borrower's creditworthiness in the future. Here's the other potential negative consequence if you are granted forbearance. And again, forbearance means the ability to postpone payments. What's really going to happen in the future? No one actually knows with any of this. This is uncharted territory, and I just can't underscore that enough as we deal with the economic fallout of the pandemic. The situation changes quickly here. When are you going to have to make up those payments? If you get 6 months of forbearance, would you owe 6 months of payments all at once, only 6 months from now? If so, that probably would not help you out, because if your tenant, God forbid, if they miss 6 months of rent payments, well, they're not going to make one lump sum rent payment for 6 months worth of rent. That's just really unlikely that they would have the financial wherewithal to do that. However, for you, if you do get forbearance, it appears more likely that your payments will just get tacked on to the end of your loan without any interest on top of what's already scheduled. Now, that outcome would be pretty awesome. All right, so we've established that you can take a pause from paying your mortgage loan servicers, but here is the crazy thing. The 5th and final link in the chain is the mortgage-backed security holder. They get their money from the mortgage servicer, your mortgage servicer. Well, where's the servicer supposed to get the money if people like you, the property owner, declare forbearance? Well, no one really knows the answer. That hasn't been worked out yet. Right now, the total share of loans in forbearance, by the way, is 6%, but that number is going to go higher. So the mortgage servicing industry has been crying out for help. We're talking about your SunTrusts and your AmeriHomes of the world. Last week, a plan had come together such that mortgage loan servicers would only have to forward 4 months of missed payments to mortgage-backed security investors, but a lot of servicers just don't have that kind of money lying around. Now, Wells Fargo obviously is a big bank, and they do some mortgage servicing as well, and there are still a lot of other big banks servicing mortgages. Big banks are actually in pretty good shape right now. They have enough money that they can deal with this situation for a while, and they're stronger than they were in the 2008 financial crisis. And since the financial crisis, non-banks gradually take a bigger and bigger share of the mortgage servicing business. And these non-banks, like SunTrust and AmeriHome, have a lot less money on hand than banks do, and they're not allowed to borrow from the Fed like a bank can. So even in the good times of the past few years, there were all these reports coming out saying, if the economy were ever to take a downturn and people stop paying their mortgages, these non-bank servicers are really going to be in trouble. And this is what needs to be fixed right now. This connection between chain links 4 and 5 from the servicer to the mortgage-backed security investor, and the aid for servicers is probably going to be there. I mean, the government typically is there to save almost anything to do with home ownership. Well, those are the 5 links of the follow the money chain: employer, tenant, you the investor, the mortgage loan servicer, and finally, the mortgage-backed security holder. There's more than I can explain there, but I won't because it could just be speculation, so we're going to see what happens next there. Let's get back to you. I said that I suggested mortgage loan forbearance if you need it. Should you get a mortgage loan forbearance if you don't need it? No. If you don't need it, don't take it. Now, why would I say that? There could be some upsides to taking it, but it puts you at some risk, like I mentioned, and there is more that is absolutely vital for you to consider here. I'm going to talk about that more in a few minutes. We're talking about following the money along 5 chain links and mortgage loan forbearance here on Get Rich Education, episode 290, as the world gradually has more and more bad haircuts as the coronavirus pandemic inches on, and you're wondering if you'll have actual weekend plans in your life ever again, just like I am. Coming up in the next few weeks here on the show, we've got a lot of great material. New York Times bestselling author John Assaraf will be here with me on Get Rich Education as we take a deep dive into abundance mindset during tough times, and a lot of other integral shows coming up here as I focus on providing you with actionable guidance that can help you on economics and real estate amidst the pandemic. I primarily reach you in 2 ways. There's our audio show, which you're listening to now, which, as you know, is released every Monday. You've probably been listening for years. The other way is through the Don't Quit Your Daydream letter, which is emailed out about weekly. And lately, the valuable letter is being sent to you either on a Wednesday or a Thursday. There is so much fast-changing news amidst the pandemic that the Don't Quit Your Daydream letter really supplements the show here well. That's why it's never been more important for you to subscribe. The letter is free, and all you've got to do is sign up now at GetRichEducation.com. I'm coming back with more. I'm Keith Weinhold. This is Get Rich Education. Property investors can get killed with maintenance costs. That's less likely when you buy brand new construction. Let me tell you about JWB Real Estate Capital in bustling Jacksonville, Florida. They pioneered the build-to-rent model where you can invest in new construction, turnkey rental property. That's why JWB was featured on the front page of the Wall Street Journal. To learn more and see inventory, start now at newconstructionturnkey.com. The company that's provided our listeners with more loans than anyone is Ridge Lending Group, NMLS 42056. You can finance more than 10 single families up to 4plexes. Serving most U.S. states, their knowledge and experience leads to your financial freedom. They're number 1 in the investment space. Pre-qualify and then chat with President Chaley Ridge personally. Start on your next investment property loan right now at ridgelendinggroup.com.
This is Rich Dad, Poor Dad, author Robert Kiyosaki. Listen to Get Rich Education with Keith Weinhold And the reason I respect Keith, he's a very strong, smart, bright young man.
Hey, you're back inside the show that's created more financial freedom for busy people just like you than nearly any show in the world. This is Get Rich Education. I'm your host, Keith Weinhold. Should you get a mortgage loan forbearance if you don't need it? No. If you don't need it, don't take it. That is my opinion. Now, why would I say that? Because there could be some upsides from you taking it even if you don't need it, but it's not quite like it's free money. It puts you at some risks, like I mentioned earlier, and some of this comes down to a question of ethics and greed, frankly. Now, I don't know what Jerry, the property manager and investor from Queens, New York, that I talked about at the top of the show, is going to do with his situation. Me, I have, I guess it's not quite $100,000 worth of mortgage payments that I make monthly, but it is well into the tens of thousands of dollars every month. I still have a good monthly rent collection, but I do have a few tenants that can't pay due to losing their job from coronavirus. However, I can make all of my mortgage payments, so I don't have any plans to get forbearance now or anytime in the foreseeable future. Because see, just on principle, if I have agreed to pay someone, like my mortgage servicer, and I can afford to pay that someone, then I do pay that someone. That's just treating other people well. What is greed anyway? Wanting more money is not greed. You want financial betterment just like I do and most anyone does. But padding your own cash reserves by pocketing your tenant's rent and then not paying your mortgage loan servicer, that's greed because I'd be profiting from hurting others. If I don't make a payment, there are other people on the links of the chain counting on that payment. That servicer or that mortgage-backed security on link 4 or 5. As the situation remains dynamic, I am just learning here right now, and this is the last business day before this episode publishes here, that 3 of the largest lenders in the country so far have already begun rewriting their guidelines to say anyone that entered into a forbearance is not eligible for conventional financing for up to 4 years after the end date of the forbearance. So there you go. Yeah, this late-breaking news kind of confirms this trend that there are more downstream consequences to declaring forbearance. Do you know what's really happened recently? I know about an investor that closed a mortgage loan, and mortgage loans are still closing here in the pandemic, of course, just under tighter lending guidelines. But this investor closed and then declared forbearance almost immediately as soon as he practically could. So he missed his very first payment, and then what the bank did is they put him in a status of what is called first payment default. Well, then the lender can't sell that loan to a servicer, and then that bank has got to keep that losing loan on their books. And also, that first payment default status is tied to that borrower, and will that come back to bite them? I don't actually know, but it's probably not going to help them. Could that borrower have made payments if they were able to qualify for the loan at the closing table just a few weeks ago? Well, yeah, they probably could. So if this impacts that borrower's creditworthiness down the road, then it's pretty hard to feel sympathy for them. It's times of adversity like this, when one's ethics show through cheating the system, tarnishes your character, and it screws up the system for the honest people, where the taxpayer might have to eventually be the one that ends up paying for it. So either I can be a part of the problem or I can be part of the solution, and I know what side I'd rather be on, and you can decide for yourself. You can call it what you want, karma, or whether you're religious or not. From Christianity, the golden rule is basically treat people how you would want to be treated. And that is a maxim in other religions too. But really, it's just about being a decent human being. We don't want to take advantage of a crisis by disadvantaging others. That's what looters do. Fortunately, we have an audience here that does want to do the right thing. Like I say, do the right thing before you do things right. To summarize part of what you've learned today, there are 5 chain links in this follow the money path that the pandemic is pressuring. They are employer to renter to property owner to loan servicer, and finally, the mortgage-backed security investor. Loan forbearance means that you have the ability to postpone your mortgage payments, and that's on both your primary residence and your rentals. Forbearance is being easily granted on most loan types with some clearer guidelines for government-backed loans, but you must ask. And if you need it, please do ask for forbearance. If you don't need it, please don't ask. As a reminder, news changes fast, and one mortgage loan servicer might outline different terms for you than another servicer does. A number of people are having that experience. In fact, there is so much fast-changing news amidst the pandemic and these strange economic aberrations like oil prices going negative last week. There's just such a glut of oil supply that oil is being treated like junk. Just like you would have to pay another person to take your junk, oil producers are having to pay people to take their oil. About 10 days ago, Chase stopped accepting new home equity line of credit applications. Now, customers with existing HELOCs, they're still going to be able to draw funds on those lines of credit, but the bank is not accepting applications for new HELOCs. You might remember about a month or more ago, I tipped you off about pulling funds from your HELOC if you think you need to. Of course, the stock market has been more volatile than usual. Housing is way more stable, but it's still too early to look at pandemic effects on housing prices. Early indications show that there is even less housing supply on a market that was already undersupplied before the pandemic, so that is substantial. There is so much changing more quickly now that the Don't Quit Your Daydream letter really supplements this audio show here. I don't think it's ever been more important for you to subscribe. For example, in some good news, the letter recently informed you that any 1031 exchange that you do with a deadline between April 1st and July 15th of this year is now moved to July 15th. That's pretty nice. And other things like that. So get the Don't Quit Your Daydream letter free at GetRichEducation.com. I'm Keith Weinhold, and I'll be back next week to help you build your wealth. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.